GetCrack. Wake up, motherfucker.
Okay, what's up? What's up? May 28th. So this morning I didn't need to wake up because nothing happened. You got the inflation, nothing happened. Trump, blah blah blah, more Iran, like deal, no deal, bull crap. Market went up anyway, not important. Marvel, who cares? Not important. Everything was about Dell. So Dell today, we had earnings and it's up 30% or maybe 40%. Last I saw it. So yeah, nothing's wrong with AI. The AI pump is continuing. People are pissed. They're getting more pissed. They want to short this market. Great. Keep trying to short it. The more you try to short it, the higher it's going to go. The morale does not improve until we get to the real toppity top and everything blows up in your face and we're done. The market will punish the most people. That's the game. The market will try to punish as many people as possible, trying to time it to the very nanosecond or whatever they want to do. Doesn't matter. For us, we continue on the road to go up, I think, and all we have to worry about, I think, is Korea. Like that's what happened. That's what I was saying last time. Korea. Yeah, we had Anthropic news today. Anthropic released the latest Claude version. Everybody's getting all hyped up for that. SpaceX, again, people getting hyped up. They're ready. They're prepared. I believe I saw some people say that the SpaceX IPO, the lockup period is very short. So the insiders will probably try to sell as quickly as possible. So that'll be interesting to see. Who's going to chase the SpaceX IPO when it gets released? That's what I'm wondering. Now, those ETFs that have SpaceX shares, they'll probably like get wiped out as it opens. So that will be fun also. I don't know what's going to happen with that. Okay. So here we are. So this is my HUT-G position. All right. I put about 10 G's into that HUT-G. So I sold a chunk of my HUT and I put them into the other little guys like APLD, Core Z, all that other crap, right? And a portion of it went into HUT-G. I leveraged it up. I still have some HUT, normal HUT, but I didn't want to risk too much on leverage. So I only put 10K. All right. If you remember, we did the homework, right? So where do I put my little when do I quit, right? Basically, where do I put the limit where I say I give up on HUT-G? Because HUT can move 6% up and down in a single day, no problem, right? So if I put my little my little thing to say I quit at 6%, that's not good enough. So I have to do 12%, right? Well, 12% on HUT. Okay, if I put my stop loss at 12%, if I do HUT-G, I have to do 24%, right? So I'm willing to risk $2,500 approximately to play this game. So that's why I only put a little bit. Now, if you do options, you have a lot more control. So I think some of you might, if you want to place bigger bets, you probably should learn options because you can control how much you lose. So you use calls and puts together to limit like where you're going to lose, but you got to know what you're doing though, right? You got to be a little bit more complex. Now we have AI, so I don't know if you really need to know options anymore. Like you could just ask AI, like you go to Grok or Anthropic Claude or ChatGPT or Gemini and you go like, "Okay, yo, I want 10x leverage. I want to limit my loss to 5%. I think I'll close my trade within a month. Make me an options trade." And then it will just generate you the options trade. Now, warning, you're assuming that AI know what it's doing. That AI could be a moron and give you the incorrect trade parameters, right? But if you don't want to pay money for special software, subscriptions to other people that know how to do options or whatever, that's the only way you're going to do it if you're a dummy. Because I don't know if you guys actually want to read all those books about options. Those books are thick. All right. For someone that actually wants to know about options, like you read Taleb, whatever his face is, I forgot what his name was. He's like, he wrote that big textbook on options, Taleb, and there's another big textbook on options. Those are huge books. So I think most people who gamble on options never read those books, honestly. Not even the audiobook. Like nobody, like any gambler, degenerate gambler is not going to understand options completely. They just want to jump into it and they just want leverage. They want yeah, that's all they want. They want to turn like $100 into $100,000. Those are those type of people. So that's what we got during COVID. We had a lot of people jump in. All they did was buy calls, buy calls, buy calls because the market just went in one direction. Up during COVID. So they thought it was easy. Buy calls and it's like a freaking ATM machine that spits out my money. All right. It didn't work in 2022 though. So anyway, do you think there's a way to set and forget a if you never need to time it perfectly? So the people that bought that JP Morgan ETF, they didn't get the gains after April 15th, right? Like all 100 went above 6,800. They didn't get that anymore. They lost out. They missed out. So you still have to figure out exactly how you want to make it. You know, if you do it yourself, yeah, I'm not sure. I'm not really 100% sure. Maybe like an ETF that pumps when it does. Yeah, I don't know. Oh man. Yeah, I don't know. I really don't know. I think it's better you just talk to AI and see what it gives you. You could have a conversation with the AI, right? And see what it gives you. I think that's the best way right now. Yeah, because most people they just do leaps. If you really don't want to time the market and you assume the stock will go up in the long term, that's what most people do. Yeah, they'll just buy leaps like Nancy Pelosi, right? They'll just buy leaps that's many years ahead. Like Moderna, you could buy a leap right now. That's what Kyle was here. He was here and he was saying like, "Oh, that looks like a good candidate for a leap." Yeah, Moderna, I don't need to be like put a lot of money into it if I buy a option, right? If I buy shares, I have to dump a lot of money to wait for it to go up, and that money is stuck there. I could just buy a leap and just let it go because I know eventually in 1 to 2 years it's going to go up. Yeah. That play on the screen is like something that if I could get a win like that, I'd change my game. I just need to do it strategically because losing. Yeah, I mean, yeah, well, you're not going to lose 100%, right? But if you lose like 25%, which is what the limit of my plan was, like if Hut G went below like all the way down, then 25% I would give up and I would basically say, okay, well, I lost 2,500, move on to the next trade. And 2,500 is probably not ideal, right? 2,500 losing 25%, risking your neck out for 25%, even though like Hut can go very high, you're still like saying like it's acceptable to lose 25%, which probably isn't the perfect trade for a lot of people. So that's why you would then go to options and be like, well, can I make sure that I get the upside and just lose just 5%, right? And then somehow like that would so even if Hut went down 25%, I would just lose 5%. I don't know. Is that possible? I'm not an options expert. That's why I'm saying like ask Claude, right? It depends on the market. And then also there's another issue too. It's like the liquidity in the options market is very different from the shares when you buy shares. Because you could have like some options that nobody is trading. So in the ideal world, like all the options are open to you, but it could be that a certain option at a certain strike has no seller, no buyer, and then you can't find anybody to trade with to get that option. You know what I mean? So then you have a liquidity issue, which you don't get when you just buy shares. Shares, everybody has shares. Shares are everywhere. Luckily in America, a lot of people play options now, so it's really easy. But like you go to Korea, right? Korea is just opening up like, oh, now we have weekly options, we have this and that. They're just starting to put all these options of availability out there, but still, like, who's trading them? You see what I mean? Yeah. So, well, I don't know if it was going to go up to 8,000. I don't know if it was going to go up to 8,000. That's the problem. How do I know? How do I know it's gonna go up there? I don't know. I don't have the future. I don't have a crystal ball. I'm just assuming it's gonna go up because of the trend. The trend, the physiognomy. That's what I need too, right? I need something to measure the physiognomy. That's what I need. So, but you can see like it's really good when you just all you need to do is study the charts and go like, well, physiognomy looks good, so I'm willing to stick my neck out for good physiognomy. But how do you quantify that physiognomy? I think is only going to be really good if you do AI, because there's no bias. Maybe. I mean, of course, AI might have a bias eventually, but for now, it's open country, right? We're exploring the new frontier of what we can do with AI. So maybe right now, everything's okay, but maybe later AI will start having biases. I already see like people saying like AI is getting lazy now. Like it actually has a personality. It stops doing what you want it to do because it doesn't care, or now it actually gives you joke results. So if AI really is becoming intelligent, then you might have to worry that AI is not giving you accurate answers on purpose. That's great. Real nice there. So yeah, undiscovered country. Yeah. So and this is what this is exactly what George Soros kind of does, right? George Soros, Druckenmiller. When you actually have stocks that you want to concentrate yourself in, I only gave you like the space stocks and these AI infrastructure stocks. And I only been really talking about them the most, right? Outside of like maybe some software companies like the cybersecurity, but otherwise, it's like I limit myself to what stocks are looking good. I don't want to bother with other trash. So I don't want to diversify. Diversifying in this type of market is a loser's game. You just want to focus your risk, leverage up, be aggressive on things that actually look good. That is the style that Soros and Druckenmiller do. This is not the Warren Buffett way. The Warren Buffett way does not like this market at all and stays out. So that's why people have different philosophies, and different market conditions require different philosophies to make money. And I think in this case, we're going to have to do George Soros style trading. Okay. Okay. So there you go. Now, let me see what I got here. Oh my God. What is all this trash? Da, 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 da. Let's see. Here, look at this guy. Look at this guy complaining. Look at this guy complaining. Unreal. Absolutely uneffing believable. Literally every stock looks like this moonshot like Dell in after hours except the stocks I own. So look what he owns. He owns Nvidia, Meta, Microsoft, Tesla, Oracle, Palantir. So he has a diverse set of technology stocks. He got one semiconductor, two communications type stocks, Meta and Microsoft. Well, Microsoft, I guess, is not really communications. Kinda, maybe. I don't know. Not really. Uh, they kind of act more like a communication service now, but not completely. So it's more software, right? Tesla, it's this consumer discretionary with AI in it. Oracle software, but some hardware now. It kind of acts like a hardware company too, in a little way. And then we have Palantir, yeah, just a software as a service company. So it's diverse. He has a diverse set of technology stocks. He picked all the losers this year. He picked all the losers, right? Yeah, well, the Mag 7 doesn't include Oracle and Palantir. It's basically Tesla, Microsoft, Meta, Nvidia. He got 4 of the 7, but the 7 already changed because Micron and Broadcom kicked out Tesla and Meta, I think. So he didn't rotate. He didn't rotate. So he just picked the winners of last year, and well, Oracle wasn't a winner of last year, so forget Oracle, but let's ignore that. But yeah, see, he didn't look at the chart. He didn't see what was going on. He didn't even listen to Trump. Trump told him to buy Dell. He didn't listen. So what you gonna do? There's gonna be a lot of complainers like this. These people will just complain and whine and just be like, dude, just look at a chart. Stop stop making this job hard. Shit. So that's why I tell you, looking at a chart is way better. Stop looking at fundamentals. It doesn't work. So let me play this guy's video. This Canadian, right? Remember the Canadian? Let me play the Canadian now. Let's see him whine. Let's see this guy whine. So like I told you, you listen to fundamentals, you get nowhere. He's going to complain about the interest rates. He's going to say interest rates go up, but how come these stocks are going up? These stocks should be going down. Interest rate is going up, but these stocks should be going down. Yeah, well, it doesn't. All right. So you don't make money on what you want the market to do. You only make money with what the market is doing, right? So that's really a big problem here. So that's why I tell you guys, don't listen to fundamentals. Okay, here we go. Here we go. Oh, don't tell me the audio doesn't work. Oh my god, not this problem again. Bruh. Bruh. This can't be happening. I ain't got time for this bullshit. Ah! All right, I guess we can't play that. Okay, hold on. I'll play something else then. Crap, this was the perfect time to play that junk. Oh my god. Oh my god. All right, fine. I guess I can't play that. Okay, let's do something else. Let's do something else. Okay. Or let's go over the charts. Let's just go over the charts for now. Okay. Let's wrap this up really quickly. So let's look at semiconductors. No follow through from yesterday. So you see this big red candle yesterday, and no follow through today. So we didn't break down below 555, right? So nothing happened. So we're safe. So we went down a little bit in the morning, but we just climbed back up. So nothing wrong there. Okay, so let's look at HUT, our favorite. HUT still going up. Perfect. So I think we are ready to continue on up into next week. So it's time to go bubble time, because now we gapped above this range. We're starting to move. We're going to build some acceleration, I'm assuming, and then we should continue on up here. Okay. NBIS went up. Some of the other ones went down, whatever, but NBIS is about to break this range, so it should be good. Wolf Core Weave should be nice. All right. So Wolf Core Weave looks good. Okay. So it should be good to go next week. And then we got Core Weave, or Core Scientific. I mean, not Core Weave. Core Weave was a loser. I don't talk about Core Weave anymore. Core Z, Core Scientific. So breakout here. You see that above the range. We should be going up next week. All right. Okay. So let's look at some earnings. So Sentinel released earnings. It's down 17% after hours. So it's probably going to lose a portion of these gains. So I guess I was hoping to see if S would just break and go up to 21, and then we're going to see what it's going to do there. But I guess we're going to break down. So never mind. S is not going to be part of this cybersecurity stocks I give a crap about. Okay, so that's gonna matter. What else reported earnings? We got Kohl's. So Kohl's bounced. All right, up 20%. So it's an ugly looking chart over here, though. Very ugly. So let's look at the monthly chart of this guy. You see how ugly this is? Very ugly. So you had like COVID, broke down, recovered, but never went any higher than that. So never went higher than what it was in 2018. Broke down again, kept breaking down all the way into tariff tantrum. We got a new low. We bounced, but that was it. This was just recovering what it lost, going into tariff tantrum. And then now we pull back. I don't know. I don't know if this is actually going to go anywhere, honestly. Probably not. It's probably not going to just break out and keep going up. I doubt it. I think it's just going to hang over here for many, many months. It's just a retailer. So, right. Best Buy, same problems. Not really interesting stock. After COVID, went down. Tariff tantrum went down. It kind of made a high in 2021 over here, but as you can see, it just hangs around wherever it was before COVID, right? So the 2018 high is pretty much where it stayed. So not interesting. Let's see, Burlington Coat Factory. How about this one? Not bad. All right, better. It's near the top. Will it break out? I don't know, but given today's reaction, negative 7.88%, not sure. Probably not going to break out and make a new trend. That's my guess. All right, Path. I think it reported earnings today, so I don't know what the results were though. But it's bottom. It's already been a bottom. Maybe if this thing pops tomorrow, maybe I'll be interested. I don't know, but looks like trash to me. NetApp. How about this one? All right, this one looks a little bit better. I don't really know what Path does or NetApp really does, but okay, whatever. This thing is breaking out. Maybe this is something I should pay attention to. All right, maybe this is the one I should look at. All right, I'll put that on my list. So NTAP. All right. How about Okta? Well, okay, maybe this is something happening here. So let's say this is the area we have to worry about. This big red bar. This area. So if it tries to climb to 118, maybe I'll pay attention to it. But I'm not going to buy it down here. There's better stocks to look at. If this thing hits 118, you can put a trigger, right? You can put a little trigger and say like, okay, you hit 118, I'll pay attention to you. If you don't hit 118, I ignore you. Okay, let's do that. All right, MongoDB or MongoDB. I think it's up today after hours. So it was already up today at 10%. So maybe tomorrow will be up another 10, 20%. Maybe it'll go up here. All right. Maybe I'll be interested. Okay. Maybe I'll be interested in this one. You see this huge range, right? So when it came out in 2017, ran right up into 2019, COVID, zoom right back up. So you see the range over here, pretty good. So this is like a really important area. So it makes sense why it tested it 2 times in the last 4 years. So, yeah. All right. So maybe we're going to go up and then make a new range over here. And then we'll go up, huh? How about that? Maybe I'll pay attention to it when it gets to 450. All right. So MDB. All right. Maybe that. Dollar Tree, messy stock. It used to be a pretty good stock to have back in 2007. You just go all the way up here. But then in 2023, it lost its mojo, broke down, whoop, and then now it's trying to figure itself out here. I'm not sure about this one. Not really sure. If poor people is not buying anything, are not buying anything. So you remember yesterday we talked about that K-shaped economy. So if the poor folks are not buying stuff and only the rich folks are buying stuff, you're going to assume that the lower upper class are going to trade down, because I know a lot of people are starting to use more Walmart. So even like the lower upper class, who like in California, lower upper class probably means like upper lower class or lower middle class or something. Maybe in California this is correct. And then maybe they're trading down. They're going down like, "Oh, I can't afford Target anymore, so I'm going to Dollar Tree." Maybe that's what's going to make this thing go back up, but otherwise I don't know. Yeah, right? So this line here at 113 seems very important. It got tested again 117. I mean 2017, it got tested in 2019, it got tested in 2021. It got tested down here in 2023, went back up, failed, got tested again in 2025, went back up, went back down, testing again. So this 113 area seems to be the place where everybody's fighting at. Will it go back above 113 and go up, or just crash and burn and go back down to $60? I don't know. Who knows? Dollar General will report earnings next week. So this one's an interesting one, right? 2008, same thing. We went up, nice trend. We lost our trend in 2022. Dollar Tree lost it in 2023. Same pattern here. We got issues with the cheap 99-cent type stores. All right, last one, Hormel. Anybody buy Hormel? Hormel chili? I don't know when the last time I bought Hormel anything. Like, does anyone buy canned foods anymore, really? I think canned foods are pretty terrible, like, not doing well. Americans have really given up on canned food. So this one, well, maybe it's just gonna do this. Since we went up 12%, maybe this, like, you can see a lot of volume though, right? You see all the volume over here? So I'm guessing a lot of people want to buy it at $20. So this will eventually drift up to $28 and maybe it'll break out again. So maybe if we get into a depression and people have to eat Hormel crap, sure. Why not? Maybe this will be a good stock in the future. All right. So I don't know. Anyhow, yeah, there we go. Okay. I think I'm done. I don't need to talk about this crap anymore. All right. Any questions? Let's see. Any questions? Any questions? Good time to buy VRT, AXPI. Both of you rebound after these dips. Okay, let's see. VRT. I haven't paid attention to VRT in a while. Trend is still intact though, I'm guessing. Yeah. See, still good. Okay, here's my problem with this one. Like, how much higher will it go compared to something else? Like, if you put money in VRT, that money is not going into another place. Like these two red candles on the weekly chart right now, yeah, look pretty significant. It looks like it lost a lot of momentum doing this. So I don't know. Yeah, I mean, there's better looking charts than VRT, personally, it looks like. And then let's see, AXPI, because I just rather buy more Rocket Lab or something. Okay, so AXPIs, you mean APXI or let's see, what AXPI? What's AXPI? Was it that other one we were talking about earlier? Shoot, I forgot what the heck it was called already. Man. AXTI? Is that the one? This one? Uh-huh. Yeah, this trend looks better though. Yeah. I mean, yeah, because this is like look at the weekly chart here with the red candles. Small red candle, small red candle. This is larger than the other two. Same size here. The week's not over. If this thing stays small, then sure. If you look at VRT on the weekly, what do I see? What do I see? I see a little difference, right? I see big red candles here, big red candle here, big red candle here, little ones over here, and now we got 2 back-to-back red candles here. Guess what? It's probably gonna go down here next week. Get what I mean? Like, it's a lot different than this one. Like, yeah, you can look at the daily, sure, but if you look at the bigger picture, the weekly, this is stronger. If you're gonna put your money in VRT, why don't you just put more money on AXTI, right? This physiognomy looks better over here. That's it. That's all I can give you. Physiognomy. I don't know. That's not a guarantee, but you can see like this is a way different looking chart on the weekly than the other one. So yeah, I could look at the daily on VRT. All right, fine. Yeah, I could look at the daily, but yeah, this thing looks uglier, huh? See that? That's ugly. This is too ugly. This is too ugly. Like, look at the daily on the AXTI. Very clean. Moving averages are separated. See, it barely touched each other over here. Pretty good. Only time it broke the 18 was over here, and over here, and over there. Pretty strong. So yeah, sure. I don't know. This one looks better. That's it. That's all I can say. Doesn't mean anything. Not guaranteed. Not guaranteed. Okay. Let's see what else you got. If you can time it on a pullback on a lower time frame, yeah, you're gonna have to do that. You're gonna have to look at it more carefully next week. You probably can't just jump into them. But if you wanted to jump into one of them, probably just AXTI right now. From what I see right now, you probably should wait next week. It's Friday tomorrow. Let's see. Okta kind of looks like a Wyckoff chart. Yeah, sure it does. But that means like it might take a long time to do what it's supposed to do though. Because the problem is that you don't know when the bubble is gonna pop because it's gonna pop, right? So yesterday I was talking about like the bubble is gonna pop, but you don't know when. And we have only a few weeks. So if you buy Okta now, you're just gonna assume it can hurry up and get over here. And that's just like 20%, right? Why don't I just go hut and I don't have to worry about resistance? There's no resistance up here. The price has never been higher up here. There's nobody to stop it. Once this thing goes up, it can just keep going up, up, like a bubble. That's a bubble. But Okta, a lot of people bought at those prices, right? A lot of people bought between 120 and 80, and they're going to stop you. If this thing goes up, the people that bought here are going to sell. The people that bought here are going to sell. They're going to slow you down. They're going to slow you down. You have to get here before SpaceX IPO and Kevin Warsh start speaking. We don't have that many trading days. We have to get through Kevin Warsh and SpaceX before we can continue on up. I don't know how quickly it can go up to 120 in time. I'd rather buy something where I know nobody has bought shares up there. It's just going to continue up and squeeze everybody out. The only people up there are probably going to be options people that want to stop it, not actual people that bought shares in HUT, right? The only way to stop it is with options. That's it. Okay. Anything else? Nope. All right. Blah blah blah. Why does Dell only go back to 2019? I think because Dell went private. Dell was a public company in the 90s. It went private. Michael Dell took it private. Then he put it back out in the public. That's why. So you can look at the drama about Dell in that case, because he was basically saying, man, having Dell in the stock market sucks. I'd rather take it private, have more control over the company again, fix the company, and then put it back out in public. That's what he did. All right. So Michael Dell, small hat. He knows what he's doing. So there you go. Okay, yeah, that was the early comment. So we're done here, right? Da, 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 da. Okay, yep. It seems to be like it's a restream that does that. So I guess so. So I guess I found a bug on restream. Yeah, it seems like it doesn't like certain encoded video files with certain audio codecs. So it looks like I figured out a bug. Figured out a bug. So there you go. I guess I have to test all my videos in restream before I go live to make sure that doesn't happen. So that's how it goes. That's how it goes when I use other people's software. You're gonna find bugs. All right, let's see what else. Where on the chart did you get in on HUT with 11K? Okay, so this was the big example I gave you with the ATR, right? The average true range. I said the average true range was 6% during the time zigzag. So when HUT went to the bottom, I bought. It wasn't perfect, right? I bought at $22 on HUT G. HUT G went lower. HUT G went down to 19 bucks. All right. So I was losing money for one day before it ran back up, but I was willing to take that chance. Right. You see what I was doing? So at the end of Monday or somewhere where it hit the low here, I bought. So maybe it was like towards the end of the day or the afternoon sometime. It hit like my target. I was like, okay, I'll just buy it. And I was willing to risk it. So if it went all the way down here, I would be like, I would accept it. I would still accept it. Only when it went closer to this dashed line, I guess, it would be like, oh crap. All right, I'm out. I quit. I quit. And I'll just take the loss, right? I'll just take 2,000, 2,500, whatever, and I'll just eat the loss. But I was willing to take that bet that if it went towards the bottom of this range and it went below it, I wouldn't care because it should bounce. And that was true. The VIX expiration, all that stuff I told you about, it bounced and we bounced. There you go. Done. Easy peasy, right? It went right here to the moving average at the daily 18. Perfect. That's exactly what you want to see. So it scared people out, probably. People probably thought, like, oh crap, it's below this price over here, $94. They probably got out. And then all the other people came in to buy, and then it pushed it back up. Right there. Done. There you go. This is why you got to practice. I keep telling you, this is exactly the type of market you want to practice in. This is perfect market. It's not too hard, but it's not too easy. If it's too easy, you don't learn anything. That's why last year I didn't talk about anything. You don't learn anything last year. Last year, everything went up. Well, not everything, but most things went up. So if you looked at 2024, anybody that bought the dip in April and then bought some more in May, it just went in a straight line into October through December, right? And you don't learn anything in that kind of market. You don't need me to tell you anything. You just buy and hold. You just buy and hold. There's not much to trade. Why do you need to make your life hard? When you have a big trend, all right? When you have a big trend, like this in semiconductors, right? Why you trade this? Why do you waste your time? There's nothing that why do I waste my time trying to predict this, no, it's just up, 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 up until it has trouble going up, right? So it started having trouble going up in November. So I said, oh, okay, well, let's pay attention now, play closer attention. So then you have to try to get out. So my last SOX L was over here, right? My last bit was February when I went into oil. I went all into oil. I got out here. And then over here, I said, like, buy software, right? And all this shit. I was like, whatever. And then I said, I had some SOX L to gamble to go up on the taco, but that's it. But I didn't think it was going to go all the way up here. It was like, what the hell? You guys are crazy. Like, this whole move, like, after, like, April 15th is like, the hell is this? You guys are insane. So once I saw that, it's like, well, it looks like it's time to practice some bubble stocks. Let's go into HUT. Let's go into the other guys, because once this money gets out of semiconductors, it's going to go somewhere. And hopefully it goes into Oracle. It goes into Palantir. It's like, that's what's starting to happen, right? You start seeing today, Palantir. Look at that. Look at what's happened to Palantir today. Why did it do this? Maybe the people that were like looking at Dell and going like, what the hell? Why did I go into Dell? I'm just gonna go to another Trump stock. Okay, Palantir is a Trump stock. Maybe I'll go to Palantir. Maybe I'll go to Texas Instruments. And maybe everybody's gonna be like, well, Texas Instruments is a Trump stock. Like, okay, this semiconductor, why don't I go to this semiconductor? So they'll get out of Micron and go over here. So they'll start dispersing everywhere, right? All that money is gonna go around somewhere else, and they're gonna be hunting for other things that Trump said to pick and buy. Another thing Trump said to buy was Bitcoin. Bitcoin has been doing terrible, but I bet you next week, because we're done with options. So options and futures for Bitcoin and Ethereum are going to be done tonight at midnight. So once all those options and futures get cleared out, probably next week, guess what? Going back to the top of the range again at 80 next week. And then after that, the first week of June, we're going to keep going higher if nothing goes wrong. That's it. That's what's going to happen. So yeah, so yes, this is the time to learn the game. This is the perfect time. Yep. So your stop was 83. I don't remember where my stop was. Let's see. So if I got HUT, all right. Okay. So I get HUT G, okay? So you're going to have to translate that to HUT, right? So whatever HUT is at that time, I mean, it's not going to be equivalent 1-to-1, right? So what? Let's say I got it around here, right? 95 somewhere. Let's just estimate. So I'm willing to get out at here, right? Somewhere here by that dotted line, right? That 83, right? Like you said. And then somehow I got to translate that to HUT G. So it wasn't perfect. I didn't perfectly get it, but let's say I perfectly got it at 22, then my stop loss here would be at 1670. So it would go lower than, see, that's why leverage is terrible, right? Because now I'm risking a lot, and if I want to play, then I'm going to have to accept that 16.8 level or whatever. All right. So yeah, there you go. Yeah. So hopefully you understand that. So that's good. SMH is close to some DeMark target. Well, I don't know. I haven't been paying attention to the DeMark counts, and I only use the tools when I need to. I don't want to use so many tools at the same time, right? The cycles say we should be good into June. That's what the cycle said, right? And I don't need to look at cycles anymore. It hasn't changed. We're going into June. I don't see any change in that. The cycle said June. I believe it's June. All right. So I don't need to look at cycles anymore. I just look at the technicals here. I'm fine. Do I need to look at DeMark all the time? No, I don't need to look at the DeMark all the time. So whatever. Do I need it yet? No, probably not. Sometimes I'll need it. Sometimes I won't. So yeah, right now we're cool. Everything's been cool because the DeMark counts have been going up. Everything's been going up. I don't see any trouble in the DeMark land, so I'm not going to pay attention to it. There's nothing like just screams in my face, goes like sell, sell, sell. Nope, I don't see a problem. So I don't need to look at it. But yeah, so let's look at Oracle. So Palantir and Oracle, like I told you guys, it's like, yep, looks like we're ready to rock, right? Ready to rock. Oracle's finally going. It's finally going. Finally. So should we buy more Oracle? Should I start buying Palantir back up again? Yeah, maybe. Yeah, maybe. That's it. If you want to do leverage, go ahead. Good luck. So let's say I buy tomorrow, right? I'll set my stop loss over here. at 190, and then I have to compute. I have to compute with the percentage with the leverage. Okay, so I'm willing to lose 7%. All right, about 7%. Then I'm have to be willing to lose 14%. So let's say I have to buy a leverage. I want to convert to leverage. Okay, so whatever ORCX or ORCU, whichever one you want to use. Then let's say tomorrow I buy somewhere at 48 or 50 or 52. Well, then I have to accept like 14% loss. So that means around 41.50. So then if I buy it at 50, then I have to accept 18% loss. 53, I'll accept a 22% loss, right? So wherever I buy, I have to accept the loss that I set when I do 41, something like that. That's why leverage sucks, because then I have to eat a huge loss. If you do options, you can be more precise. You don't have to do this stupid game like I'm doing right here for you. I haven't learned to mark just the projection levels. Yeah. I don't remember what the projections were, but I'm assuming we're getting close to it. Yeah. So we'll see. If the Koreans break down, then we'll know. App's still moving, but I don't know if it's real. Nothing's real. Nothing here is real, man. It's all fugazi. The only thing real is when you buy and when you sell and you make a profit. That's the only time it's real. When you don't sell, it's not really profit, is it? As long as you keep holding, it's not really real. You can just give it all the way back. So it's only real when you sell. Yeah, I don't know. Seems real enough. Will it go all the way up to 700? Wow. Maybe. All right, guys, that's enough. Let me double check that I got all the tickers that I wanted to cover, every little dumb ticker, and I'll see if I can play some kind of video for you, and then maybe I can download it, download something while I play another video. Re-download or re-encode it or whatever. I'll have to figure that out. Dell, I covered. This one I covered. Okay, done. Good. All right, don't need this anymore. Okay, we're good. All right, let me play this video for you. This one's pretty interesting. This is about geology. Okay, geology. This is geology. So maybe you guys, we'll take a little break from talking about stocks. Let's talk about geology. Oh my god. Shoot. Interesting. So even that one doesn't work. Fascinating. All right. Okay. Interesting. All right, let's continue on the video that I played last week. And then
Good afternoon, ladies and gentlemen. We are here on May 26th. It is a Tuesday, coming back from Memorial Day.
Okay, just to refresh your memories.
To say, hey, pump the brakes here, things like this. And you do just went around here, overall market higher. Now, the last time that we really got a reading on this ratio was back.
Okay, so if you remember this ratio here where he divided the dispersion index with the core 3M, so like the top stocks correlated with like the whole index or whatever, something like that, correlation over 3 months. So when this blue line gets too high, expect trouble. That's basically it, right?
Here in July going into August, and during that time, what was happening? Well, you were seeing a big run up in the S&P 500 right into and around here before going through about a 10% correction in the markets. Now, this is where it gets interesting, is because how do you prepare and how do you time for that? And I think that's what these last couple of videos have really been kind of honing in on, and that has to do with our gamma flip line. So if we just go back to this time, which was 2024, so a couple of years ago, when we started to see this ratio rise like this, and you go back over here, it'd be kind of hard to time it because the market kept going higher and then all of a sudden it broke. So what was that factor that really told us to say, hey, pump the brakes here, things could get crazy, right? Because we didn't know that this was going to happen. Well, if you go back over to here, this is the VIX, right? I'm using the VIX. You can look at VIX futures. I'm just using this, and I'm highlighting it with this gray box. And this gray box starts right here on this specific day. I'm going to show you what that day is momentarily. And what that day is highlighting is the very first day in a while that we slipped under the gamma flip line. And the gamma flip line, I'm talking about the S&P 500 gamma flip line. And what that tells us is that volatility can increase, liquidity can dry up. And the main point of being aware of it is because it can lead to the potential of higher volatility. And as you can see, we got this warning shot on this day. So when was that? Well, we started to see, right, dispersion really increase. We had core 3M, at depressed levels. And then all of a sudden, right over here on this specific day, it was like 7/17, I believe it was, we started to cross under the gamma flip line. And then if you were aware of that, you could have known to start protecting yourself for a potential larger move down in the S&P 500. The reason I once again want to reiterate this is because the S&P 500 has been heading higher. We're starting to see the spread between the dispersion and the core 3M obviously reached to levels that we haven't seen in quite some time. So when things, break, or if we break under the gamma flip line, not all the gamma flip lines are going to be similar to one another, not all times that we fall under it. And when we start to see these things stack up, that just makes it that much more important to know where that gamma flip line is on a daily basis, especially if you are an active trader. Now, if we go back to that time on the SPX and we look at July going into August where we saw that sell side, where did we sell off into, right? The market was pressing higher and higher. It actually came right into the lower quarterly expected move in very fast fashion, and that ended up being a great buying opportunity. During that same time, if we look at the total put to call ratio, that was back right over here, and you could see that the line started moving up sharply above 1.0, that's the 10-day moving average. And when you get up into that area, it could typically mark out decent bottoms as we cross back through, as it did here, as it did over here. Sorry, I did it right over here. And then also right in this area too, where we saw some geopolitical risks that led us to a little bit of a sell-off this year. And then when we're below this 0.8, it's typically where you want to be a little bit more careful, which is also why we're saying it's just that much more important to be paying attention to this gamma flip line. And that's despite just how bullish everything is. It's a time to really hone in and start to preserve, protect, and just continue to play with the trend, but not to rush into the market if you were late in this run, or try to buy the dip aggressively the moment we slip under the gamma flip line, okay? The things will set back up again, and we could watch out for key levels as the market takes a little bit of a breather, potentially here in the very near future. So the gamma flip line is actually below this week's weekly expected move, which is at about 73.30, at least as it stands right now in this moment. So we're well within the market's expected move. This is a shortened trading week. So would we cross under it this week? I mean, the chances of that are probably pretty slim unless we get some more geopolitical risks that the market does not like, and that drives the market outside the lower expected move. And it would have to be quite an aggressive, move, because we started this week off with a little bit of a pop to the upside. And as you can see here, we actually got out of the gamma flip line right earlier here in April, and that led to a nice rally. And we're starting to see S&P 500 volatility. Actually, today it was up even with the market up higher. And then we also have the constituent volatility that's actually at a quite elevated.
Okay, so this is the VIX EQ. So a lot different from the other guy, right? The other one here.
A nice rally, and we're starting.
You see the VIX is going down, 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 down. So that nerd said the VIX is going up and the stock market is going up, but I didn't see it. I'm like, what are you talking about, bro? You got some fancy VIX that we don't see? Maybe he has his own way to calculate VIX. The VIX here is computed based on the S&P 500 index. So then we have another type of VIX.
S&P 500 volatility. Actually, today it was up even with the market up higher. And then we also have the.
So now we got the VIX EQ. So how this is computed, I guess, is like through the individual 500 stocks separately and equally. So they weight everything equally. So you don't have like a Micron, Nvidia overpowering the other stocks and making the VIX look like normal. When you look at this, it doesn't look normal at all. It looks like, shoot, man, a bunch of stocks are not doing well, which is true. Only a few stocks are actually moving up. Everybody else is going down. So you gonna participate in the SpaceX IPO or sit out? Sit out. I don't play that crap. You wanna gamble? That's probably a good place to gamble and practice your day trading. So if you want to practice your day trading, do the IPOs. Didn't we already have a Cerberus IPO? Like you could every day you could open it up and practice your day trading on it because it's so volatile up and down that it's a quick way to learn like reading the chart, right? You open up the minute chart and you go like, oh, okay, buy, sell, oh, moving average over here, oh, ADX. Like you could just practice on SpaceX with a little money, right? And just gamble. Because then you could learn chart reading really quickly because you could look at the ranges build up every second. Like every second it's building a new range and it goes up like another, you know what I mean? It's a fast way to learn. So you could use it like that, but a serious like longer term trade, no, I ain't touching that trash. Nope, 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 nope. There's better things to play. I think you need 100K to get you need 100K. Who said that? They do? What? I never heard of that rule. Where's that rule
the
at?
constituent volatility that's actually at a quite elevated level. So think of this as more like equal weight. So when we look at the S&P 500 as a whole, a lot of the names are seeing elevated volatility, but yet the overall index here, which the S&P 500 is a cap-weighted index, is at more of a depressed level. So that's where we're getting that kind of higher dispersion that we're seeing. Now, these expected moves are going to be critical to pay attention to. Today was a great example of that. As we were pulling into today's upper weekly expected move, right, it started off with a big bang, this move, and everyone's pretty excited, but it was well within the market's expectations. Micron is way outside of the market's expectations, but the S&P 500 is well within it. So we came into there at about 7:40 a.m. in the morning, and from that point, what happened? Well, we started to just kind of take a little bit of a backseat and started to breathe a little bit before eventually heading up a little bit higher there. So going into tomorrow's trading session and the next one and the next one, it's going to be critical to watch for these expected moves because you can create trade opportunities in and around them. So going into tomorrow's trading session, our expected move is roughly at about 746.33 down to around 744 and some change. Now this 744 is the eyeball indicator, which is part of my Discord. Now, this hasn't been fully updated yet, so that will be updated a little bit later tonight. If you're in the Discord, you can utilize the Asher bot, and the Asher bot is where we can get those specific levels on any names and plot them on your charts. The upper level is right by the upper weekly implied move. We have about 750.
Like all these people are paying their monthly fees. Oh, yeah, I was muted. So I was just saying, like, all these people are paying these monthly fees for all these services. So TrendSpider is one you see on the screen, TrendSpider. So he's gonna charge you $60. He was talking about his Discord. So Samantha LeDuc has a Discord too, right? So all the boomers probably don't use that, but then she has like a bunch of people that subscribe, that are young, that use Discord, and then they'll have like bots or whatever to guide them in their trades. So she has that. And so this guy probably has it too, right? You subscribe, $60 a month. He'll tell you like, oh, I see something over here, I see something over there, blah blah blah. Everything with bots and all that. So that's what the Discord will do. And then he pays a service as well to these other people. TrendSpider is one. If you have to get a gamma level, there's a lot of gamma levels that require you to buy another subscriptions fee. So all these guys are all about giving you a membership, a subscription. And the stuff I'm trying to tell you is like, if you look at the charts, try to use as much information as you can from free data, right? Charts are free in general, right? The basic service of TradingView or stock charts is free. You don't need to buy a subscription for either of those to get anything more than that. But if you want all this, like, oh, expected value, gamma flip line, blah, 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 blah. And then if you go to his Discord, it automatically does everything. Well, you got to pay money. He himself has to go and pay other people. Samantha has to pay other people. All this data comes from somebody else. So there's multiple levels to this game, right? There's people that feeds all this extra data. They collect that data. They repackage it for you, and they charge you a fee. So that's why Samantha charges most people like $500, $1,000, $2,000, depending on the level, a month. This guy charges, he used to charge probably $30. Now it's $60. So all these people are just charging more and more money. So that's all I said. Anyway, I'm not in MCK. It's done. Drop. Long term, I think MCK is okay. If you really need to have a stock for long term, you can get MCK. But if you're not in a rush to buy it, for your like IRA, so if you have an IRA account, or if your 401k allows you to buy a long-term stock, yeah, MCK is a long-term stock, like Ross, right? I showed you Ross. It was like, that looks like a great chart. Ross, Dress for Less, ROST. Go get that one. So there's certain ones that have very good trends. Or Coca-Cola. We were talking about Coca-Cola last time. And then I said, like, well, look at Mexican Coca-Cola stocks, bottling companies, right? They all look good too. So whatever. Yeah. Did Mama LeDuc shut down her Twitter? Knitter is just showing her posts as members only. Uh-oh. Maybe she charges money. But I don't know. I still see her posts. So I'm not a subscriber to her Twitter. Yeah, Twitter, you can charge people too now, right? So I could say, like, my posts are for premium subscribers only, and you got to pay me. And then Elon gets a cut, and I get my cut. That's it. Everything is like, everybody is going to go this route where, oh, you want to see my stuff? I'm going to charge you some money. Yeah.
I'm going to round to around 756. Once again, the blue level will be updated by about 9 o'clock Pacific Standard Time or 12 a.m. Eastern Standard Time. If we continue on and we look at the SPX as a whole here, you can see we are trading outside of the upper monthly expected move as the month is coming to an end overall. If we start to see this market take a little back seat, a couple videos I said I would even lower. I still think that's more than a possibility heading through June to see, and that would still be a very strong looking market, right? Just to see a pullback. Now, one thing that I got to be very clear here is I'm not looking for trades to short this down into these levels. I'm looking for names that are still doing very good. They're pulling back, they're consolidating, and looking for continuation. That's what I'm looking at in a very strong bull market. So We'll continue on here. A couple of the intermarket assets that I'm paying attention to is obviously the 10-year yield and oil. And oil took up a little bit of a backseat today. Where oil is going to go, you probably know where the 10-year yield is going to go because they've been moving in lockstep fashion. As you can see, oil is that black line. The 10-year yield is the candlestick chart. In fact, we started finding a little top here in oil as we were pulling back shortly thereafter. The 10-year yield started to follow it. And if we look at oil here, really we're just underneath. We're kind of in this range back to where really the big conflict started, and we're at that lower end of the range since the big conflict took place here. So to come back up into this range, very possible, especially if things intensify. We're well off the lows today, and a pop higher in oil could be a bad thing once again for markets. It could mean once again higher yields as well. So if we start to break down a little bit, right, that could help the market, as we saw today. A down move there helped the overall market catch a little bit of a breather back up to the upside. The dollar is still holding a very defensive posture here, just kind of consolidating sideways. Perhaps maybe this could be some sort of a double bottom that's forming to come back up into and around the 100 marker. That's the the trade weighted dollar. If we continue on, that higher move in the dollar is obviously putting a little bit of pressure on gold, right? Gold went down. Now it's consolidating sideways. What's the dollar doing? It went up a little bit. It's consolidating sideways. They're kind of moving in lockstep fashion from an inverse correlated perspective. Another interesting thing taking place in the markets is the Sailor to Shift tool, which is utilizing the 4-week rate of change between Bitcoin and gold. That cross underneath the 0 line over here, which is a potential warning shot for a sell signal. Now, this is just day one of this trading week, so we still have some time left for Bitcoin candle to close. And if this closes underneath the 0 line, that is what's called the sell signal. The trigger would come as if the next weekly candle closes below this current week's closing price. That would be the sell trigger. Now, this was our buy trigger on this week. From that point, what happened? We came down a little bit and we've been running up. So we saw a nice little pop there on the last buy trigger. So that's going to be something to continue to pay attention to. I will note, if you're looking at Bitcoin overall, we saw, big thrust down. It went sideways. We saw a larger thrust down, and we've been just kind of doodling higher, and we just kind of ran our head into the declining 200-day moving average. So perhaps it's going to take some time, right? Maybe we go down a little bit. Maybe we do a little bit sideways. Maybe this flattens back out, and then all of a sudden we can build a little bit longer term base to head up higher. But as it stands right now, what I want to see is obviously, to be more bullish, this to start turning itself back up and be back on that buy signal and buy trigger. That's all.
All right. Good. I think you guys understand that. Yeah, you got to really look at all the things. Okay, so if you do long term, you have to do monthly. You have to look at the monthly at the very least. You can't just ignore that. Because you're talking about very long-term investment level. You're going to look at monthly, and you might even look at quarterly. You might actually look at the quarterly chart. Every 3 months is a candle, and you look at it that way. Okay, so let me do this. Okay, let me look at the DeMark on this guy. Let me look at the DeMark on this guy. Blah, 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 blah. Okay, hold on. Let's see. Blah, 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 blah. Oh, come on. Let me see. Get rid of this. Okay. Do this. All right. Okay, here we are. Okay, let's look at the DeMark. This is monthly chart for McKesson. Okay, and here I put the Ichimoku stuff. So this is the style that Rick Bensignor uses. He uses DeMark and he uses Ichimoku. So on the Ichimoku monthly chart, we're fine. We're perfectly fine. You see, so we got the red and pink or fuchsia right here. This is basically your moving averages, okay? So As you can see, the last time we tested the red one, the baseline. So this is the baseline. This was the Japanese baseline. Going down to this dashed line here, the TDST line. So 500, worst case, because this is a 1, 2, 3 building up. So if April makes a 4, then probably most likely we're going to have to go down here. And this dashed line is going towards the cloud. This is the cloud, the Ichimoku cloud, okay? The Ichimoku cloud you can think of like a piece of jello. So it has a lot of struggling here before it continues on down. And then it does a lot of struggling here before it can continue on up. So you don't want to get to here. If you get to here, you might be like continuing down, but it's going to have to be a range down here. Most of the time, if it goes towards it, it'll hit the top of the cloud and bounce. It'll hit the top and it'll bounce, but I don't think you want that. If this thing does come down here towards 500, so next month, if you start seeing a weakness and by the time we end June with a bad candle, then no good. That means we're going to have a long range probably is going to develop. We're going to have to go up and down, up and down, up and down, up and down until we get out of there. So it's not guaranteed, right? Not guaranteed. I mean, if you look at traditional technical analysis, a big up candle and a big down candle, and this is monthly chart, mind you. This is a monthly chart. This is not like some minute chart, okay? This is more serious. When you have a monthly chart where 1 month it goes up 18, 19% in February and then goes down 12, 13% in March, this is very significant. You have to take this really seriously, okay? So when a bar goes up very high and it loses all of it, the next bar, that's significant. It's not like this one, right? This one was just like, oh, well, we went up and then we lost the trend and we went down. Okay, that's fine. But this one actually tried to make a new high with a very strong bar. And then the next bar, it just went down and lost most of it. That's not something you want to see. So when you see this on a monthly chart, I have to take it very seriously. This is not a joke. That's not a joke, right? So if it can preserve this level, okay, maybe it's fine. Maybe I'll just go back up. But next month, if this thing just breaks down completely, then see you at 500. And that's probably the better time you want to buy. Yeah. Okay. Yeah, that's it. The other thing to watch is with the DeMark, if it completes a 9. So if it does 1, 2, 3, 4, 5, 6, 7, 8, 9, it finishes the count, then you have to take it more seriously. If it just does 1, 2, 3, 4, 5, 6, and then bounces back up and it doesn't complete the 9, and then all the counts disappear, then it's okay. Then it's fine. But if this thing actually completes a 9, then this probably means that it's going to go inside this cloud, have more of a struggle session here, okay, before going back up. If it just does 1, 2, 3, 4, 5, 6, 7, or whatever, and then doesn't complete a 9 and this goes back up, then okay, maybe we do a range up here and then we go up quickly. But if it goes inside the cloud, then that means we're going to take a longer time to finish this range into next year probably, or maybe even 2028. I don't know, right? So there's nothing more we can do right now. I don't know what the future is. All I can do is like, what the heck is happening in next month? That's it. That's all I can do. All right. That's good to go. So let's see. Anything else? No. I can look at the quarterly chart for you. Let's look at the quarterly chart. What does that give me? What does that do? Quarterly chart looks fine. So this is even a longer term chart. You see how crazy it looks in the quarterly? It just dances right down here to the cloud, and then it bounces right back up. So it looks a lot different than the monthly chart. So when you look at the quarterly chart, it's like, well, okay, see, it completed a 9. And what happened after that? It stayed going sideways for a long time. It went sideways from 2018 into 2021. If it didn't complete this 9, it probably would have bounced and went up faster, right? It would have bounced at 2017. But because it just completed that 9, it's like, uh-oh. You finish that 9, you're going to stay there longer. So that's what the DeMark can give you. The DeMark can kind of give you this extra insight. So if you look at this quarterly, this is a strong chart. Look at this thing. 1, 2, 3, 4, 5, 6, 7, 8, 9. And it just keeps on going. 10, 11, 12, 13, 14, 15, 16, 17. This thing just keeps on going and going and going. So if it doesn't break this and just like continues on, that we're okay. We're okay. So the next quarter, the next 3 months, if this thing is just goes back up and it completes a 30, we're safe. We're safe. We're good to go. So hopefully you understand that. Hopefully you understand that. Yeah. So that's what's interesting with this way, right? The way when you look at the market, it gives you a more a different expectation. So when I look at this stuff, you can see a lot more things with a DeMark than you would with a normal chart. All right, that's enough. That's blah 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 blah. But yeah, like I said, I think AI is better at doing this stuff. I don't want to waste my time looking at these dumb things, but it's necessary. It definitely is necessary. Okay, time to play another video. So let's see. I was downloading all the other videos. Let's see if it fixed the audio. Please, please, please fix the audio.
Dr. Richard Smith here, and welcome to the first presentation of Science Day for Cycles in the City 2026, a track made possible by a generous donation from our sponsor and science director, Ray Tomes. So in 1996, Ray traveled to Stavropol, Russia to attend what may be the largest cycles conference held in modern times. 500 scientists from across the natural sciences gathered around a single question: does the world have rhythm? And in the tradition of Kondratiev, a Russian, in a country where serious cycles work has deep and sometimes costly roots, institutional science taking the question seriously. And Ray gave the keynote. And after his talk, a geology professor from Moscow University, Spartak Afanasyev, heartily congratulated Ray and pressed a book into his hands. It described a method for dating geological deposits hundreds of millions of years old, using tiny annual sediment layers called varves, which preserve the signature of the moon's 18.6-year nodal cycle. Ray lost contact, Afanasyev passed away, and just last year, Ray tracked down his daughter and secured permission to translate the work into English for the first time. What you're about to see is a preview of that translation and a window into a tradition of cycle science that deserves to be remembered. It's never easy to work in the field of cycles because somehow we're always cutting against the modern institutional grain. We thank Ray for his lifetime of hard work and commitment to the study of cycles and for sponsoring Science Day in 2026. I hope you enjoy this fascinating bit of cycles history.
G'day, I'm Ray Tomes from New Zealand. I'm the Science Director of the Foundation for the Study of Cycles. Today I want to talk to you about something that's been a long time finally coming together, but it began in 1996 when I went to a cycles conference in Stavropol in Russia. There were 500 people at this conference, which has got to be perhaps the biggest cycles conference in modern times. I was a keynote speaker. I didn't know that till I arrived. I thought I was just giving a talk in one of the things, harmonics theory, to the whole audience. And after that, they split up into different groups, for all the different subjects. After my talk, which was translated by a young lady from English into Russian, one guy came up and told me, that's the best translation I've ever heard of a scientific talk. She did it. It was very clear in English and it was very clear in Russian. And I said, oh, that's great to hear. Thanks very much. And another Russian came up. He was your archetypal stocky Russian, and his name was Professor S. Afanasyev. He was the geology professor from Moscow University. And he came up and he grabbed my hand and shook it vigorously and thrust a book into my other hand. And it was this book. And it's about, I translated at the time, the title as Nanocycles Method. And it's a method of dating geological deposits. I find now the correct translation is probably nanocyclic method, but it gives you the idea anyway. It's based on tiny little cycles which are laid down each year when water flows down rivers towards lakes or the sea. It carries a certain amount of silt. And when it comes down, the larger particles settle out first, then the medium size, and then the smaller ones. So you get these layers of varying compositions that make the annual cycle very clear in these deposits. And so that's what the nanocycles are, these cycles in the valves. And what Afanasiev had done, in fact, because these cycles are strongly affected by the tides in the air, and they are controlled by the sun, the moon, and the earth configurations. And it's a very complicated thing, which I'll explain in a little while. But the result of that is that you get cycles which are currently 9.3 years in these layers, but it varies over time. And as you go back in time, that period changes considerably. And there's a second order effect as well. So when you get 9.3 years, you also get, because that happens in the first one happens a certain season, 9.3 years later, it happens 30% of the way through the year. Another 9.3 happens 60%. Another one, 90%. In other words, almost back to the start. On average, the cycle will repeat every 9.3 divided by 0.3 years, which is 31 years. And both the 31-year cycle is also found in some things. It's found, for example, in the price of rice in China over a millennium. It's also found in some lakes in Africa. So this is a widespread thing. He actually has a third one for when it comes back again. They're hundreds and thousands of years. And he lists all of these every 0.2 million years from naught through to about 600 million years ago. So this is his method. So what happens is you find some valves, you measure them very accurately, how thick the deposits are over a period, and then you look for the cycles in that, and then you look up in the table and it tells you how old that deposit is. I was later to find a very good example to work on this. A little more about the conference. The conference, after that opening speech, it split up into all the different groups. So there was a geology one, a weather one, there were animal populations there, all the different things that we study. And they had, with 500 people, it meant you had about 50 to 100 in each of those. And I went to the geology one because Professor Afanasiev seemed very interesting to me. One of the graphs in his book looks like this, and that goes from 1 year through to 1 billion years and shows how many cycles are found at each point.
Aha! So, I can predict evolution at this point, guys. I know when the next time we're going to have another Cambrian explosion, guys. If I know the 1 million year cycle of the galaxy, I could predict everything in humanity. Well, assuming humans even last that long. I don't even fucking know, man. Shit. I probably will just predict that like dolphins will become the new dominant species or something like that. Yeah, your time is up, humans. Your time is up. You guys didn't learn the cycles, man. The cycles were all there in front of you, but you didn't want to learn. You believed in climate change, blah, blah, blah. That was trash, is wrong. I saw a tweet by McClellan on Twitter. He was just laughing at the climate change guys because did you know recently, like a couple months ago, they just threw away all their climate predictions? Like all the worst case climate predictions that they were saying, like if you remember in the 90s that everybody was telling people like, oh, we're gonna die, or like the whole earth is gonna burn out, or the carbon dioxide is gonna make us all like all that stuff was trash. All that stuff was trash. So they tossed all that stuff out. And McClellan was like, you owe us an apology. But dude, McClellan is just like, he just does stock market stuff, and he was just like saying that. I think the cycle guys knew it was all BS. So if you just look at this Earth, the sun, and the moon, you would have predicted climate changes and variations more accurately than just looking at pollution and all that stuff. Because, like, dinosaur farts were probably as pollutive as like anything else over history.
So that's interesting, because that's a little bit like the graph I put up showing the harmonic series predictions of the cycles of different periods. And I think that's why he was so keen to give me his book and shake my hand, because he's been doing the actual measurements of all these cycles and cataloguing them all, while I'd been doing the theoretical why that should happen. So that was good. For a long time, I was trying to get in touch with Professor Afanasiev, without success after the conference. I should have got an email address or something. Anyway, I didn't succeed. But just recently, last year, I managed to make contact with the editor of a geological journal and asked him for his help. And he came back to me and said, I couldn't find Afanasiev because he's dead, but I have got it. I have forwarded your email to his daughter, who's also a scientist, but in a different field of science. And I got an email from her saying, she was surprised to get this email from somebody overseas interested in his work. And she gave me, I said I wanted to translate his book into English. And she gave permission to do that. So my son Luke and I are working on this. It will be ready this year. I want to get the Cycles Foundation to publish his book in English, as they have done with Spanadui's books. I think it's a very important book, but I also intend to make an electronic version available free for students of geology throughout the Western world, because I think this is a very important method. It's far more accurate than any of the existing methods used for dating deposits. He also sent me his biography, and it was quite fascinating. His parents lived in the period of the Russian Revolution. It was pretty tough when he was young. Russia was not an easy place to live at that time. So what happens is, he heard the story of Spartacus and how he got the slaves to rise up against the Romans. At the age of 5, he heard this from his grandmother, and he said, I am Spartacus. And so he changed his name to Spartak at that point. So ever afterwards, he was known as Spartak Afanasiev. So I love that story, and I can see him. He's a character, or was a character, and so that was great. When all the streams came together from the conference at the end of the one person reported on what they had discussed and found in their section, and he was the one for the geology section. And he didn't just tell us his report, he sang it and it rhymed. And I could recognize some of the words in it, but not most of it. But I gathered it was pretty hilarious. Everyone was laughing the whole way through. Was a lovely man. So anyway, back to the method. So this is the table in his book. And you can see over on the left there, we're going up and going 0.2, 0.4 million years ago, and it tells you the cycle's length. And you can see there's one of just on 9.3 years there, and next to it 31 years, and a variety of other figures. So if you find a deposit that's got a 9.3 year cycle and a 31 and those other figures, you may not find all of them, but the first couple, then you know that it's just been laid down. If you go down a bit, you might find one at 9.088 or something there, and other ones there. That means it's 1.4 million years old, and you can interpolate those values to get the ones in between. This is all based on a formula he used, which is based on the motions of the moon with respect to the Earth and the Sun, and it's a very complicated little arrangement. But let's go to the method first and then come back to the complicated little arrangement. So when you find those values there in a deposit, then you can date it. So I applied this to the case of another geologist who's very interesting, George Williams in Australia. He edited a big fat book called Megacycles, the opposite to nanocycles. Megacycles in geology, a geologist as well. That was the first reference I got to geological cycles. And in that book, it mentioned cycles of about 600 million years, about 300 million years, about 150 million years, 74 million years, and 37 million years. And it was clear that it was halving. So if we go backwards from 37 to 74 and keep doubling, we get 148, 296, 592. So I was expecting it to be in the vicinity of 592, the longest cycle of those. When we look at some of the long-term cycles we have from climate, we can see these cycles. We can see the just under 300 million year and the just under 150 million year cycle and the other ones in the changes in temperature and carbon dioxide over long periods. Just to put this in perspective, 600 million years ago, the carbon dioxide on Earth was about 300 parts per million. Over the next 150 million years, it rose to 6,000 parts per million. Yes, 20 times as much carbon dioxide. Then in the next 150 million years, it came back to 300 parts per million. Then in the next 150 million years, it went up to 2,000 parts per million, and then down to 300 parts per million. And from there, we've climbed now to 430 parts per million. So you can see that carbon dioxide has had a pretty exciting journey. And when they say that what's going to happen now is it's going to extinguish all life on Earth, that's patently absurd, because during this whole period, this is the period when all multi-celled animals developed on Earth. And mammals started before the last peak of 2,000 parts per million. So mammals developed in that period. So they're not going to go extinct.
Well, there you go. Climate change is bunked. We've been through here, man. The rats survived. The little monkeys survived. Get real. You're telling me you can't handle a little bit more of carbon dioxide? Yes, you can. Yes, you can. It's going to suck. It's going to be humid as hell. But yeah, you can survive it. Anyhow. But the key point is the moon, the sun, the earth, all that stuff. I think later on we'll discover that the moon, the sun, the earth, like it not only affects like soil, right? Like what we're doing here with geology, it also affects your mind. You'll probably find like your pineal gland is probably like has a bunch of rocks in it, right? Because you drink fluoride. So now all your pineal gland has a bunch of rocks because you drink all that fluoride, and it calcifies your pineal gland, and then your mood changes because your sleep cycle changes. So then the moon, the earth, and the sun all affects the changes inside your brain, your sleep cycle, and your moods. And then they'll figure out, oh shit, no wonder all the women have more intense PMS and this and that because of all this stuff. And then it affects the way you buy stocks, because then you get all hyped up. We have a full moon coming up, right? So they're all probably going to be like, oh shit, yeah, let's just keep on buying. Buy all the stocks. Intel will go up another $200 or whatever shit, So I'm telling you guys, learn cycles. This is the stuff that's really going to make a difference. If you learn this stuff, man, you're probably going to make a lot more money. A lot more money. Lunacy comes from lunar. Yeah, that's right. That's where it comes from. So that's why it's like, dude, I don't care why it happens. I don't care how it really happens. I just know it is happening. There's something going on. There's a repeatable cycle that occurs and repeats over and over again, right? We have boom and bust. We have technology cycles. We got all this stuff, everything, war cycles, empire cycles. All these things are related somehow, some way to this so-called reality. And once you figure that out, I'm done. I don't need to know the reasons. All right. There probably is a reason, but I'm not going to study the Venus and Mars orbits just to figure that out. I'm sure Venus and Mars has something to do with it too, but I'm not going to go that deep. Who cares? Anyway, let's keep going forward here to the animation. Here we go.
And the important thing is when the nodes of the moon's orbit point in the direction of the sun, then you can have eclipses, but also you get stronger tides at those times. So it has that effect. When we put out this paper of Athanasiev's work, with the table and everything. That will all be made clearer in there with diagrams. I'll put some diagrams up here. First one is showing the Earth going around the Sun. Then we can see the Earth's axis tilted so that as it goes around, it does this. Of course, that's rotating in space too, but that takes 25,000.
All right, trigger warning, flat earthers, get out of the show. Trigger warning, anybody believing flat earth, this is not for you. Please leave. Yeah. I mean, I know there's an 18-year cycle, the Saros cycle, SAROS, which is interesting, right? One letter off from George Soros, a Saros cycle, and there's an 18.0 something cycle with that. There's also an 18.6-year cycle, also having to deal with eclipses or some kind of nodal thing. Yeah, Saros cycle also has something to do with eclipses, like the number of eclipses changes, okay, and per year or whatever, how many eclipses you can get over a period of several years or something like that. I don't know. You can all look this up. This is like crazy stuff, but yeah, you could look it up. But yeah, it matches with the empires, you know, which is also interesting.
1,700 years to rotate one, so we don't. That's important in these very long periods, but the tilt is about the same, so it's not that important.
All right, so let's look at the tilt. There is some cycle like some kind of effects with the tilt where it's like it just changes a little bit because of the precession. That affects like if you look at the Sahara Desert, like 5,000 years ago, the Sahara Desert was pretty much a jungle, and then because of the little tilt changes, because of the precession, the slight changes in the tilt affects like the wind patterns, and then all of a sudden, like the sun, the wind or the clouds get like the patterns of the clouds start changing to the point where more sunlight gets to the Sahara Desert compared to before. So the water never gets a chance to not evaporate. So then because the sunlight gets through quick, like a lot more than usual, because the cloud patterns now change, then the Sahara just dries up. So then you can see like these little subtle changes affects everything, and that's like a 10,000, 20,000, 30,000 year cycle. Yeah, so
although the tilt does vary a little bit as well, but the important thing is the moon's orbit, the 18.6 years, which becomes 9.3 of its.
Okay, yeah, so that's the 18.6 year. That's what I'm talking about.
Nodes going around relative to the Earth's orbit. When the moon's node lines up with the sun, as I said, you can get eclipses, but you can also get stronger tides at those times. So that's, I presume, the reason why you get the cycle showing up in the valves. Let's go back over the other thing about the 9.3 divided by 0.3. It seems funny to divide years by years and get an answer that's in years, and you're not really. What you're really doing is you divide by 0.3 years. That tells you how many cycles it takes to get back to the same orientation. And so when you divide 0.3 into 1, you get 3 1/3 cycles. That means 3 1/3 cycles of 9.3 years, which on average is 31 years. So it'll take 3 cycles the first time, maybe 3 the next time, and the next time it will only take 2 because it's getting a little bit off each time. It's got to get back. So it's a complicated thing. In one of my earlier talks at the Cycles Foundation, I talked about average cycles and specific occurrences. This is one of those cases. The specific occurrences have to be a multiple of 9.3 years, and they've got to be either 2 or 3 of those, but on average, it's got to average 9.3 divided by 0.31, which is 31 years. So that's the average cycle, and the other.
Okay, 31 years, that's interesting. 31 years is interesting because somebody mentioned to me that there's a 31 year to 32 year credit cycle. So the credit cycle, the boom and bust on the bond market with 30 to 31, like 40 years, it's like it gets affected by that too. So it's like, what the hell's going on here? Crazy stuff. Anyway, all right, we're done with that. Yeah, so they had their conference, the Foundation of the Study of Cycles. They had their conference. So I don't know if you guys paid $1,000 to go to New York to check that out, but there's a bunch of people that will talk everything about cycles right there, for anything, and it affects everything on the earth, and everything on the earth includes the stock market. So there you go. And Bitcoin and presidents and Congress and who knows what else, whatever, doesn't matter. So there is a higher power overarching everything. We work on a time scale. We work on clocks. Everything goes together. And either you believe there's a conspiracy, and even if you don't believe there's a conspiracy, there's definitely a higher rhythm that governs everything we see on this planet. And we are still part of the ecosystem here, right? We're still animals. So I don't think you should believe in the conceit that, oh, just because you're a smarter animal than everything else, I don't know, maybe you're not that smart, honestly. I'm beginning to see a lot of whales and dolphins and stuff and octopus that seem to be acting a hell of a lot smarter than a lot of humans nowadays, that I'm beginning to question human intelligence. If they had an opposable thumb, I think dolphins and octopus would probably wipe us out pretty quickly. So, yeah, I think you guys better catch up, because if you guys believe in the mainstream narratives here, I think you're gonna be really screwed over, huh? How about that? How about that? Anyhow, let's talk about the treasury yields. How about this one?
These are yields through yesterday. 30-year yields, you can see on this point figure, I drew a yellow shaded area at the resistance zone, which is 5.1%. And you can see that it turned back underneath. This, I think, is somewhat related to circumstances in the Middle East and the potential that, lower oil prices could actually take some of the pressure off of the Treasury. And we said this when we did look at interest rates a week or two ago, that this resistance would very well hold here, and this would be a good thing. And so I'd love to see this 5%, 5.1% area not exceeded.
So yesterday we played Larry Williams' presentation. He showed you that the futures market on the bond market, so the futures of the bond market, showed that a lot of people were buying futures for the bond market, the 30-year. And that means like people are aggressively betting that it will go up on price. So when the bond market goes up in price, that means the yield will go down. So if people really are buying 30-year bonds in the futures market, then they're predicting that we probably won't go very far above 5%. Now, how does that affect the 2-year though, right? So the bottom half of this screen, you see the 2-year. Now, if something goes wrong, the 2-year could still go up. All right. But because we see that the 30-year has a lot of people buying it again, then we should not expect the 2-year to really break out significantly. However, if we just do the point and figure, right? Look what he drew down here. Based on the point and figure of the 2-year yield, it could go up to 5.4 to 5.7%. So if something in the inflation really picks up, all right, because remember, we had inflation numbers this morning and the market totally ignored it. the market was like, yeah, inflation is high, but we don't give a crap. Okay, so the market still does not care about inflation. And I'll play the next video where the Canadian guy, the guy who listens to fundamentals, is going like, what the hell is going on here? The interest rates are going up, and all these stocks, which should go down because they're sensitive to interest rates, keep going up. And he basically just gave up and said like, well, looks like the market doesn't care what I think. So anyhow, if the 2-year at the bottom here goes up to 5.4 or 5.7 later on, that's really bad. I don't think the market can ignore it at that point. It probably can ignore it when it goes up to 4.3, 4.4, 4.5. But if it starts shooting up to 5 or 6%, nope, I don't think the market's going to ignore that. But for now,
it's a wish on my part, but somewhat related to what we're seeing in the charts too. And it makes sense that it would maybe pause here, back up, maybe it can even reverse, but I'd be shocked if it did. And then underneath is just a 2-year note. And you can just see there that it's also pushed up to its resistance area. It's attempting to hold that 4.1% yield zone. It's right around 4% right now. There's very important resistance right above, and it went up and kissed it, touched it. And so as long as it can stay below that, that's a good thing. Just pointing out how well point and figure works on these yields. Do it all the time. It's just a great tool. And we may only be counting part of it. And I said this before, but we may have a much bigger count than this. And let's just hope it doesn't go through that.
Yeah, well, let's hope it doesn't, because then the market will just crash and burn. All right, so let's go to the Canadian. Let's see what he says. He's going to complain. Oh, man, here we go.
It's Sunday, May 24th, 9:19 a.m. as I start my narration for this week. A couple of things. We have potentially, it looks like, some kind of resolution to what's going on with Iran. On Saturday, Trump posted that he's reviewing a final review of the deal. It looks good. We're so very close. This is it. This looks like it's it. Later that afternoon, Iran said, I don't think we're close to a deal. I don't know what this guy's talking about. Now, I don't know if that is to make the U.S. president look erratic and desperate, or if it's true. First of all, I don't believe the U.S. president, and I don't believe the Iranians. I don't believe the Israel. I don't believe anything anybody says in that space. You simply just have to watch what is going on. And what is going on as of May 24th, now at 9:20, is that strait is still closed. So these are just words. I do believe Trump wants out of there. He would love nothing more than to sail his boats out of there and declare victory. Even though the world knows this is not a victory, still, let's just declare victory. So we have that going on. May 22nd, Warsh was confirmed as the chair.
So you can see he's gonna be like, what is this? Nothing works. Fundamentals doesn't matter. Blah 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 blah. Yeah, the market doesn't give a crap, bro. You gotta look at charts. So let me skip ahead to 5 minutes.
And then I go to you and I say, okay, well, since the beginning of the year, this is what has happened to the yield curve from the 2 all the way out to the 30. And let's look at REITs, real estate investment trusts, which are very, very bond-like.
What did I talk about 2 weeks ago? I talked about the REITs. I talked about real estate, right? I talked about the real estate investment trust. I said, like, watch that market. Look at that. Look at that. It's going up. It's going up. Why does it go up? Home Depot is going down. Lowe's is going down. The home builders are going down, like Toll Brothers, Lennar. So all those companies are going down. They're very sensitive to interest rates, but the REITs, they're going up. They're going up. So the only reason I would think they would be going up is because somebody knows that in the future, 1 year from now, we won't have a recession. Everything is going to be fine. Inflation is not going to kill us. So why would the REITs just keep going up? So outside of semiconductors, the REITs were the most well-improved companies in terms of price over the moving averages, just by charts. Just by looking at the charts, you could see the REITs are doing fine. They're doing great. Who is buying them? If there's something really going to go wrong very soon, very quickly, nobody would touch them. It's okay, I see semiconductors go up, right? It's a bubble. Semiconductors is a bubble. That's fine. I believe that. But how come people are buying REITs when the bond yields are so high? And this is what this guy is complaining about. He's going to complain and said this makes no sense.
Given that this has happened since the beginning of the year, and the higher this goes, the lower the present value of cash flows, REITs being very bond-like. Let's take a REIT index. Would you expect it to be up or down for the year? Naturally, you'd look at this and you'd say, well, I'd expect it to be down, certainly not up. Down, maybe not down a lot, because if the long end of the curve is going up that much, there must be inflation expectations building up, which means it must be a vibrant market. So in valuing REITs, we have an R and we have a G. And our cap rate, R minus G. The G might be going up. The R is going up. That stays fairly stable. But certainly, I wouldn't say, oh, REITs are on a tear. I'd say, well, given what's going on to the price of money, probably a little bit negative. Nope. I said, no. They're up 10%, and we're 5 months. We're almost 5 months into the year, and they're up 10%. You would say, it must be one hell of a market for real estate. And I said, not really. Not really. Residential REITs are having trouble. Office REITs are having trouble. Where's it coming from then? 9.4% along with that dividend yield. You're up over 10% all in your total return on REITs since the beginning of the year. Macro just hasn't worked for so long. I used to be able to look at where nominal rates are, where the level of the yield curve is, where real rates are, where they were going, and have some expectation of where other things are going. But we have, right now, and this is very troubling, we have the long end of the curve going up, which should depress the present value of future cash flows.
So he's basically saying, look at the 30-year. It's up 5%. People would rather buy bonds. How come they're buying real estate? Bonds give you 5%. You should be buying bonds now. But how come the money is going into REITs? What's going on here? The dividends you get from the REITs can't possibly negate the risk you take from buying a stock. A bond has essentially zero risk, assuming you believe America doesn't implode within 10 years, 20 years, or 30 years. They should pay you. The American government with the Treasury Department should pay you an interest every month. Okay? So you get your nice little payout. Take 5%, divide by 12. That will be how much you get paid. All right? Okay, so whatever amount of money you put in the bonds, right? Let's say you got $1,000 you put in the bonds, right? Take 5% of that, divide by 12, and you figure out how much money you get per month, right? Pretty easy. You can do the math yourself. But if you look at REITs, yeah, REITs will give you like 5% probably at most, but it's a risk because you buy a stock. That stock could go down. So you get interest, but the stock can also go down and you'll lose money. And so that interest doesn't compensate for the loss you have in the shares. But look at what's happening now. it's up 10%. So he's like, what the hell's going on here? Why is it up 10%?
Triple Q up 17%, IWM 16%, SPY pushing 10%, XLP 9%, IYR 9%, XLU 6%. This is probably the most bond-like, up 6.23%, KRE up 7%. Well, IWM, you might say, well, okay, well, we have this, which means maybe IWM is expecting rate cuts. Nope. If I said, oh, no, the market thinks there'll be rate hikes, you would be absolutely perplexed. Absolutely perplexed. And now mind you, I put you to sleep in 2018 and I woke you up in 2026 and I'm showing you this stuff and you think, what is going on in the world then? How can this be? The very quality and nature of small cap stocks must have changed over this time. You'd be looking for a reason. Or maybe the reason doesn't matter, that the level of the yield curve and the direction of interest rates simply doesn't matter anymore. Now, under what condition, if I asked you as a macro analyst, under what condition would you say it no longer matters? There'd only be really two conditions that you could name where it no longer mattered. Number one would be the economy must be on fire. And I say, well, not really. Well, then there must be a ton of liquidity out there. Well, actually, yes. This is where we get to, is when you have so much liquidity in the market, I don't think the interest rate really matters anymore. So I'm troubled with the first two screens. They don't add any incremental value. I myself am getting nothing out of it, because even as I go through this and I look at where things are and I think, well, okay, it means this for this and it means that for that, I start seeing ZQ a drop in price, meaning higher rates. I would say, well, that would be a short position on IWM, right? I mean, you'd short these small cap stocks, you would be crushed, up 15.83. So I think I'm going to probably, with the first two screens, drop them off and maybe just revisit them every now and then when they're newsworthy, when it means something, because I do spend a lot of time on these first couple of screens every week, and it just doesn't seem to matter because it doesn't inform any trade that I have. No longer includes the yield curve. Staples 9.17, IYR 9.4, XLU 6.23. These are very value oriented, very stable in their cash flows, very predictable. There should be some predictability and correlation or negative correlation with that yield curve, and there's none.
Well, what did we learn today? Fundamentals don't matter. Sorry, you spend all your day looking at spreadsheets, trying to compute yields and blah, 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 and compare it to like some utility stock, some real estate stock, some staples stock, right? I could look at Dollar Tree. I'll be like, I could figure out where Dollar Tree is going to go if I look at the yield curve. Wrong. Oh, wait. I could figure out where like a REIT is going to go, right? Like this apartment complex owned by BlackRock should do this. I could predict what it does just by looking at yields. Wrong. Oh, well, a utility, right? I could just look at all the utility stocks like Next Energy, PG&E, some random one, I don't know, New Jersey Power, Gas, and whatever. So I could just look at the yield curve and I know where it's going to go. Wrong. So I could waste all my time with these spreadsheets and I get nowhere. But if you look at a chart, you don't need to do this. See, this is why I told you guys fundamentals. Oh my God, this is why I threw that book out. The Intelligent Investor, right, by Brian Graham or something Graham. When I saw the .com bubble, I threw that book away. I was like, nobody gives a shit about fundamentals when there's a bubble. When there's a bubble, nobody gives a crap about it. All right? It doesn't work. Okay? If you're going to be a Warren Buffett, you're going to miss out on a lot of potential, right? Because of George Soros. This is the reason George Soros is not in the stock market as much as he used to be, right? Every time he sells stock, he keeps it into the bonds. He goes to the T-bills, he buys bonds, he keeps them in cash. He doesn't want to touch these stocks. Doesn't matter how high it goes. So there you go. And yeah, people rather chase risk than because it has a higher reward, of course, because these people they're not rich. That's one thing. And then the other thing too is there are a lot more people gambling on options, which and now the options market now drives most of the regular market because a lot more people keep gambling, or a lot more people are hedging with options, right? And even if they don't know options, they're buying ETFs like the JP Morgan hedged S&P 500. They're using that, so they indirectly get options. So anyhow, and it's a good thing you probably don't know about yields and bonds and interest rates, because if you did know about those things, you would probably say this market should be shorted and you would have been killed. This guy would be like, yeah, you got to short all these stocks, and then utilities up 6%. Real estate up 9.4. Staples up 9%. Those should all be going down, but they're going up. If you shorted those stocks, you got crushed. That's what he said. Small caps, IWM, right? Just like the biotechs, the small biotechs, the same class of stocks Moderna is in, and what other ones are in there? I don't remember. All the little pharmaceuticals, the psychedelics, the weed stocks, some banks, some small banks, up 15.83%. If you shorted that too, thinking like yields go up, those things should be going down, and they're not, then you lost money. You lost money. So either you lost the potential of money by going into bonds, because instead of going into a boring bond or T-bill, you should have been in semiconductors. You skipped that out, or you just went the other way and shorted a bunch of the sectors because you think the yields are going up. It's a good thing you don't know these things. If you think you're too smart, you got proven wrong again. You're never smarter than the markets. You're never smarter than the markets. Doesn't matter how much you know. The market wins. Maybe the market is going to be wrong later, but you're wrong today. It doesn't matter if you're right in 3 years. I don't care if you're right in 3 years. You're wrong today. All that matters is today. I trade today. I don't trade for the next 3 years. All right. There's a bubble right now. You better get in the bubble. You better make money in the bubble. That's the whole point. That's the whole point I was making. Like, look at the charts, because if you do this stuff, you're wasting a lot of time. You're wasting a whole lot of time, because you just like look at this. You're like, yeah, okay. The 2 years 4.1%. The 30 years 5%. Based on that, this market should do this. No, sorry. The rules changed. It changed on your ass. And that's why I played that other video about the changing rules and stuff. This market is dynamic. It keeps on moving. It's a moving target. The rules are changed right underneath your feet. It's not easy. Anytime you think like something should work a certain way, I bet you that market is going to make you look stupid. So I'm always afraid. I'm always going to be afraid. I'm always going to be watching my back. I'm just going to be like, you got to second guess yourself a few times, you know? You'd be like, damn, it should be doing this, but it doesn't. Why? Yeah, so anyhow, okay, let's see. What else we got to cover? He also talks about INOD, but I want to do that some other time. He talks about the fundamentals of that company, which is probably interesting to talk about too. Yeah, he does a lot of good fundamental analysis stuff. So from time to time, I'll bring up these videos, right? I'll bring up an options video. I'll bring up a fundamentals video, and I show you like how these other guys think. And sometimes it's appropriate to think that way, and other times it's not. But when you learn charts, the charts always work the same way in any case. It's independent of these other ways of thinking for the most part. Sometimes you'll have to rely on them, and sometimes you won't. I think the best type of person would be someone that's flexible. Okay, flexibility is my goal here. I want to be as flexible as possible. I also want to be as simple as possible. I want to make money in the simplest way as I can without overcomplicating things unnecessarily. When the time comes and I need to have extra information, I'll get it, right? Maybe I'll need DeMark. Maybe I'll need some cycle analysis, but most of the times I'll just look at a chart, plain, very easy, doesn't require you to pay extra money, and it should do 90% of the work for me. But in the weird cases, you know, maybe I'll rely on it to like double check my homework and be like, all right, let me double check. And then if everything aligns correctly, I'll go for it. You know what I mean? So all it does is like covers the bases where charts can't handle, right? Charts won't tell you certain things. And when I need that extra help and information, then I'll pull it out. But I won't pull it out all the time because it will waste your time. You're only one person. You don't have an army of people analyzing stuff for you. Maybe with AI you can, right? I'm guessing like with AI, we could potentially incorporate everything into one model, and you don't need like a whole team of people doing this. You just let the AI kind of like guide and present information when necessary, and then, you know, it's just like turnkey. It'll be like boom, 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 boom. This stuff is like the dark matter of the chart. Yeah, this is like the dark. Yeah, you could think of it like that. Yeah, sure. That's a good way. That's a good analogy. Yes, like the dark matter. Correct. Unless you don't believe in dark matter. I'm not going to get to a physics stuff here. Yeah, maybe some people will be like, the dark matter is a conspiracy. I'm sure there's a lot of physicists out there will be like, dark matter doesn't exist. It's all bullshit because like they couldn't figure out the mathematics. Yeah, if some physicist watches this video and says like, blah, 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 man, dark matter doesn't exist, that's all because like someone screwed up the mathematics. Yeah, all right, fine. I mean, I'm not here for that. Anyhow, yeah. Late night. Yeah, what's up? What's up, Kyle? Okay, so let's see. Do I have another video? Or am I done? Maybe I'm done today. I think I covered everything I needed to. Oh man. I think I gotta take a break. I gotta take a break. I already rambled enough. So let's have some lightheartedness. Let's go. Let's talk about some Dalmatian dog here. Let's see what the Boyd is doing. What's the Boyd doing? What's their financial?
Look at that. Look at that guy that laid all that shit. Where did they even find all them dang things? What are they made out of? What material is that?
Brick Mountain.
Dude, there's a shitload, and there's been a shitload for a long time, and I don't know how they got everywhere. But once you want to look into that shit, that's going to twist your wig back. I'm a traveler.
Hello.
Hey, Steven got it. Yeah, I like that.
TK, hello.
Hey, yes, sir. How we doing?
How are you, sir?
Oh, good. Not too bad. We're just kind of touching base a little bit, man. It's been hot in the woods. Yes, sir.
Just ignore Jeremy. You just talk to me.
Okay. Yeah, you can. He's taking a break.
Yeah. Go ahead.
Everything going good in your neck of the woods?
Yeah, very well. Absolutely.
Man, I like to hear that.
How much did Jeremy make today?
I think right now he's throwing up a good fucking good tens of dollars.
I can make $300 in 2 days.
Fucking A, brother. Yeah, that's a decent amount. What are we?
All right, let me replay that. Holy shit.
I think right now he's throwing up a good fucking good tens of dollars.
I can make $300 in 2 days.
Fucking A, brother. Yeah, that's a decent amount. What are we trying to say? You're giving him a business opportunity?
That's $150 a day.
Hold on, Dalmatian, did you just see that fucking bug? You see that bug that just literally floats in front of him and floats in and every time he stops and gets in his vehicle?
TK, I don't care about bugs or anything. I am so close to being so motherfucking rich. You have no idea. I'm so close.
$300 a day is quite a far away from being super rich. Yes, you don't got that many bills.
No,
you're doing great.
No,
I know.
I know. No, you don't know how close I am. I'm so close.
Hell
I can give this guy. I'm like the richest person that watches this stream. I can give this guy so much money. I guarantee you I am. I'm the richest in so many different ways.
Okay, I do. I love the how you're talking about it and how you feel about yourself, and there's definitely not a problem for that. And the encouragement. What is there? Do you have an opportunity for us, or that you're trying to bring?
Well,
how do you?
TK, I mean, how much are you? Tell me how much you make
a day. A day, usually over $200 on an easy regular day.
Just and how much are you allowed to work? How much are you allowed to work?
I don't. There's no hours for what I do, but okay. So there you go. I answered your question.
So you can make $6,000 a month. How much? I mean,
you can easily. Yes, you can make. I can make $6,000.
I'm asking you. Yeah. You can make $6,000 a week.
Okay, if we're talking, let's talk rational and reasonable and proper. Okay. Now you're talking money. Yes, obviously, if you contract any little job out anyway, how I make money, you can make money quick and easy, or not easy, but you can make it at the drop of a hat.
TK, shut up and tell me how much. No.
So apparently, breaking news: we got a Kick streamer who's about to do something naughty on Kick. All right. In other breaking news, Zeus IRL, misspelled Zeus, Zeus IRL, has gotten KPP. So he's gotten Kick partnership. Kick partnership, baby. We got Kick partnership on Zeus. Zeus is gonna make it, guys. Zeus is gonna make it. Sadly, he had to leave the RV. All right, the Chicken Andy RV, because his parole officer told him he had to go drive back to Texas and take a piss test. So, pro tip: do not get a DUI. DUI probation suck. He has to do a breathalyzer to keep his car moving. He has to do piss tests randomly for drugs. So please do not get on probation on DUI, because it's going to ruin your life for a couple years. Yeah, D-Dog should pump his ticker. Bro, I was trying to get people to get on Pump Fund streaming and make shit coins. We can make a bunch of crypto nonsense meme coins and just make money. No, they won't do it. Of course not.
It doesn't.
How much are you making a month? How much would you make in a month, for example, or a week, or just a few days? I mean,
we'll do $1,000. Okay, there you go. What are you talking? I just need to know what we're getting to. What are you?
Yeah, you're saying you make $1,000 a week?
Not at all. I never would say that, but. You said a couple days.
Why don't you answer about money?
You said a couple days, you nutbag.
You're like Jeremy.
You said you make $150. What are you? What is going on? I don't get what you're coming and flexing on. And it's fine to have. I love the energy you're coming with, and I love the fact that you're, bringing financial freedom to people and trying to say that anybody can get it. Let's hear how to get it, buddy. This ain't a competition. Let's hear what the ways are.
TK, I'm asking you how much. Are
I just told you. I make money.
$1,000.
Yes, man. Anything can happen. Now go ahead. I just don't know what we're talking about. Are we investing in something? Are you trying to make a?
You don't understand what we're talking about.
Look at this.
Yeah, I do understand what we're talking about. But you're fucking talking like you can make $150 a day, which ain't shit. And then now you're asking me my fucking numbers when I wasn't fucking doing that shit. And now all I'm saying is this: all you got to do is go ahead and now either you're talking about an opportunity for JP and bring it up to people in ways to advance their life in the future, or you're being an asshole. That's all I'm saying, man. Come on.
I'm just simply asking you about how much you make.
And I've answered you multiple times, dog. You know what I do, and you know that we're fine. So we're there. Jeremy's doing this, which I'd understand. That's why you're coming to him with this business opportunity.
Who's going to pay for your daughter's? Who's going to pay for your daughter's car?
That's done all the time. Why are you coming at me about that goofy ass shit right now?
Tell me
you're talking about a measly little $300 in 2 days, which why Burger King, okay? You're fine. And then you ask me how many hours I'm allowed to work is the craziest words I've ever heard, and what the fuck I do. So we're on two different fucking planes. So chill out. I'll be respectable. You're being respectable. We got JP stream. This looks like a great net, and I'm fucking.
TK, I don't think you made over $200 in a day in probably your whole life.
You're saying the most asinine things right now. You have to understand that. I can take you. We can take
really?
one little quick side grab. You weirdo dog. You're talking to a person that just doesn't. I don't even know how you calculate anything. I don't know what you're talking about. You want
really?
$200 a day?
What was the last day you made over $200?
You can go help a fucking guy just running a goddamn wheelbarrow for 2 hours and make $200. You fucking sissy. Now chill out and go what the fuck I don't know what you're talking about. Measly shit, dog. To me, you just gotta understand. You're not understanding what I'm talking about. So yeah, you're little whatever you're talking about. If it's an opportunity that's coming all the fucking time, sure. Or you're talking about, you got a little side hustle and you're making some scratch for a little hit and miss. I don't know what the fuck you're talking about, dog. And I'm trying to let you know we can do this, or we can. And I'm getting a little hungry, and now I feel bad that we're coming hot. Okay? I'm getting hot right now.
You can't afford to buy food, or you can't afford food, or what's going on?
I'm talking with you gentlemen here and trying to conduct myself in a nice time. And I told you I was trying to get off a second ago. Who can't? Everybody here that's obviously using the internet to pay for all this can afford day-to-day living. If not, there's obviously benefits and everything from the government or the fucking communities. So what we got to do here is if you're shitting on people and fucking thinking you're better, I don't know why you would do that to somebody. It's very rude.
How was I?
You tell the people the fucking opportunity that you're talking about amongst them and want to make that people feel like you're such a big tit dick to talk to. Okay? You must be the goddamn
what are your bills?
You know what the fuck? Why are you asking the weirdest question? Who cares? $5,000. $5,000, and I make enough to obviously afford all my electricity and things like that. Okay, now there you go. What? Now get to the point that you're going at, homie. What are you getting at?
Five grand in bills? You have $5 grand in bills a month?
Easily.
Then what are the bills that cost $5K?
How would you not know about bills when you have multiple trucks going out? You're paying gas on all sorts of vehicles. How do you get materials? How do you fucking just got fucking your shop that you're paying electricity for? You got all sorts of fucking moving parts all over the goddamn place, buddy. Then on top of that, you have a home that you're living in too. What are you talking about? You have fucking insurances. You have fucking medical bills. You have fucking all sorts of shit, dude. Are you fucking joking?
What are your bills?
What are you talking about? I just fucking listed half of them out. What are you getting at though? Please, what are you getting at? We want to help Jeremy become a better man like you, and that's what we're trying to get to, correct?
Can't find a better man.
That's pointless endeavor, TK. Jeremy
then why did you come up here to talk about $300 in 2 days? Because that ain't shit.
When was the last time you made over $200
that anything about that, but I'm not trying to be rude to any other human out here besides this cocksucker that's coming in very hot energy, and I do apologize for that, Jeremy. But this guy's coming in awfully odd and just being a fucking just rude to people for no good reason. He brings it up like he wanted to talk to a person, and then you just come with absolutely nothing. Where you turn into just asking questions.
What are your bills?
You're not answering anything. I don't know what's the point. What's your point? What are you getting at, dog?
I'm getting at that you don't pay your own bills. You don't pay bills.
It's so crazy.
Like the only people. My point is, okay, shut the fuck up. My point is, Jeremy. My point is.
Get the fuck out of here, dude, you little bitch.
That was the weirdest shit I didn't get. Go ahead.
He's so fucking weird, right? He's the
weirdest
weirdest
the
little
oddest
baby.
Fucking conversation. It made no sense.
A 30-year-old. Yeah, you don't pay bills.
Did he just get his own apartment for the first time?
I pay bills.
Yeah, did he just get his own apartment? Like, he now knows what fucking the cable bill is? Oh, dude, I never knew that fucking fiber internet is fucking $112 a month. My phone's another fucking $118 a month. I know he doesn't own that fucking car his either, so that's motherfucking money. Yeah, dude. It pays. OPC, is that OPC? How you doing? I hear you're getting ready to do a goddamn challenge. I'm appreciating it. I'm gonna rock and roll. It's always a pleasure to talk to you. Gamer's back too. But fucking OPC, you're a good guy. Fucking get out there, boys. I'll see you guys in a bit. I'll be watching.
The fucking chat now.
OPC, your connection's a little wonky.
Nicky, I think his mother kicked him out.
All right, so Jeremy, Jeremy looks like Mr. Bean, huh? Well, you know, I think he kind of has some resemblance to Zelensky, so I'm thinking he might be a very distant relative of some sort. But yeah, that was King TL. Yeah, tropes. That was King TL. That's not almost sounds like King TL. That is King TL. Yeah, so that was King TL arguing with him about bills and $300 in 2 days. So apparently D-Dog left his parents' house. So he used to got paid $20 a day allowance from his parents. He used to live with his parents, and now I guess he's free at nearly 30 years old. He's free. He's actually in his own apartment. He finally knows what bills are. I guess he got a job, or he's still like getting Pokemon cards and flipping Pokemon cards or something. But okay, you got $300 in 2 days, which is what, like $20 an hour. So you can get that in California, minimum wage. You can get $20 an hour flipping burgers. So I don't know what that proves. Okay. Anyhow. I think we've gone insane. We've gone insane. Like yeah, dude. One trade for me is like, what is this? I got this 10 days ago. So 2 weeks, I got 8 G's on one trade. So that's just one of my trades in 2 weeks. So $300 in 2 days really doesn't make you the richest person in chat or on the panel. Okay, I'm pretty sure there's somebody in chat. I saw John Frederick in chat, so I'm sure John Frederick makes more than $300 in 2 days. So anyhow, whatever. Okay, I guess you're the richest guy. If you compare yourself to teenagers, maybe, I don't know. Even then, I don't know. I don't think that proves anything. So wild. We got wild ass people in the Boit. So I'm thinking it's gonna get worse, right? It's gonna get worse out here. Okay, so let me see if I got another stupid picture I wanted to show. I want to show this one, and then we'll end it. Japan has been exporting a lot of gold. That's pretty strange, huh? Let's see where we got here. Blah blah blah. Where's that at? So Samantha LeDuc was theorizing that the whole yen carry trade has shifted into gold. Okay, so this might add a lot to it, because now we see that Japan has been exporting gold. Huh. Fascinating. And then we got Russia, Turkey, some other countries dumping a lot of gold to buy, to keep their currencies afloat, to buy oil, I guess, to trade it for dollars. And then also there's a bunch of companies selling a lot of treasury bonds, right? U.S. Treasury, to keep their currency from imploding. So yeah, you know, there's a lot of funny stuff going around. I don't know. This system is getting more and more complex as we move further and further along. I don't think anybody knows what's really happening here. So let's see. Japan's gold exports surged 35.6% year over year in fiscal year 2025, which ended in March 2026, to $25.5 billion, the highest since data began in 1988. The average export price rose 48.7% year over year to a record $117,400 per kilogram, driven by surging global gold prices. At the same time, gold imports surged 120% year over year to $1.1 billion, the highest on record. As a result, Japan exported over 200 metric tons more gold than it imported in fiscal year 2025, valued at $24.4 billion, up 37.9% year over year. Japan's domestic gold production is too small to account for the scale of export growth, according to the finance ministry, which says the figures point to an outflow of previously smuggled gold into the country. The suspected mechanism is that gold is smuggled into Japan without the standard 10% consumption tax, sold domestically at tax-inclusive prices, could generate a profit margin and then exported overseas. Unusual gold movements are taking place in Japan. And there was some other news that some ex-CIA agent was caught stealing $40 million worth of gold from the government. So somebody needs to audit Fort Knox. So did somebody steal all the gold from Fort Knox and shipped it to Japan and then flipped it out? Bruh. Bruh. Crack, do you dabble in alternative investments? What do you mean by alternative? How alternative? How alternative are there? Yeah, I remember the gold Fort Knox audit. That didn't really happen, did it? So we didn't have that. I bought a Bubble Mew in December. A Mew? A freaking Pokemon card? Man, where the hell is my Charizard? I had a freaking first generation Charizard. That's worth like what, $10,000 or some shit? I think I threw it away. Anyway, where to go then? Where to go then? So I don't know what you mean by alternative investments. Like, how alternative are we talking about here? I don't know. Maybe we can discuss that some other time. Sports cars, Pokemon, comics, no. Art. You want me to talk about art too? Art's a really great way of cheating taxes. Rich people love to buy art, and then they lie at what cost basis they do it. So I knew a friend who dated this French woman, and she was like, she was married to an Oracle executive. So she was very wealthy. So she bought a lot of art, and then she would just like, in the receipt, she would just like take away some like add or subtract some zeros here or there, and then just like tell, because collectibles taxes are different, like baseball cards, gold, silver, comics, anything that's a quote-unquote collectible is in a different section of the IRS. So if you schedule a form like Schedule D or whatever, and then you have this little section that goes like collectibles, then it's different. But of course, I'm assuming a lot of you guys don't report that, so I'm not going to snitch on you. So anyway, there you go. All right, guys. Yeah, I think we're done here. 2 hours, 30 minutes. Very good. We'll see you. Oh, yeah. Hunter Biden. Yeah, sure. Hunter Biden art scam. Yep. Pizzagate. Yeah, you remember that guy? Podesta, all that art stuff. Yeah. All right. So, I'll see you tomorrow, maybe, if something exciting happens. Maybe not. If nothing happens exciting, who cares? But